Well, it's been really tough. When you look at the absolute level of yields, I think it's going to be a very challenging year in terms of producing return. But as a value investor, I think that's where some of the pockets of opportunity are going to come. That the market's got to reprice, and part of passing the baton to the private sector means M&A activity is going to pick up, and that means more supply hitting the credit markets, which will push that repricing further. I'm hoping that will be a great buying opportunity.
Where else do you see buying opportunities?
Well, it definitely has been tough to find good value. I think that as tapering takes place and interest rates move higher, you're going to get reactions in different pockets of the market. Emerging markets, we saw a sell-off last year, and I think that is going to continue because the fundamentals are weakening. But I think that could prove to be very much an emerging opportunity, and I think it's important for fixed income investors to think more globally as they look for those broad opportunities in 2014.
Kathleen, I know you liked municipal bonds in 2013. Same story in 2014?
More supply, and I think you've got some credit events happening in the muni sector, and that could also create some opportunities for total return investors as well. Taxes are likely to go up. I think this is a market that represents good value.
You mentioned the 10-year hitting 4%. When is the market pricing in the next interest rate hike in 2014?
The market is starting, I think, to price that in the first half of the year, in the first quarter or the second quarter.
What about inflation? Is it something you're thinking about at all yet?
It's percolating out there, but mainly in the developing world. There is plenty of excess capacity here in the U.S. and the rest of the developed world. So I don't see inflation really becoming a problem, but I think a lot of that will change as demand begins to really pick up, which I do expect.